Hello again, everyone. Welcome back. In this weekend market update, we're going to take a look at the S&P 500 ETF, the SPY. We'll look at the Elliott Wave picture on it. We'll check in on a couple of those bank ETFs, S&P Bank ETF KBE and the Regional KBR. Of course, you know they've been in the news the last couple of days, especially the regionals. Take a look at the leading semiconductor ETFs, SMH and the SOX. And conclude the video looking at Apple. Okay, here's the side-by-side of the Dow Industrials, the S&P 500, and the NASDAQ 100. The Dow was up 711 points this week, the S&P 500 up 110, and the NASDAQ 100 up 596. Interesting how both the S&P 500 and the NASDAQ 100 look like haramis, not harami crosses. They look like haramis. Now, typically, I would say, you look for maybe a large white candle with a dark inside candle, but it doesn't have to. There is no rule that's tied to the color of the candles. It's the formation of what's going on, and these look like perfect haramis to me. The Japanese candlestick pattern, which basically says, caution, it looks like we could have a pullback coming. Now, I'm not saying there's a crash. I'm not saying that we're about to have a crash, but I am expecting a correction. Okay, I've been talking about that. And look at the move we've had. To look at this move and then say, wow, a correction is crazy. Well, I think if somebody says that, I think that comment's crazy. So anyway, just my thoughts. Let's take a look at the SPY. So here's the what happened on Friday. Here's a picture with the daily and weekly. Up $3.75 on Friday. Look at how it's just been clustering inside the entire range of the prior Friday, right? So all the days this week are inside the huge range of the move down in here. And then the same picture that we got over here on the SPY on a weekly basis. So right now, I'm looking at this thinking there's a pretty good chance we've started the corrective pattern. We'll see what kind of fall through we get. Naturally, we need to take out Friday, October 10th low. So the Elliott Wave picture I've got is that I'm counting this, that we are in a fifth intermediate wave to the upside, one more major wave in that we are in it. And I am looking for a second wave correction, what I'm calling minor 2, back down in here. So the real question is, how deep is this going to get? All right. Ignore this caution. It's just where I've got the fifth intermediate wave. It's like these are all linked together. And do not look at where I've got 3 and 4 and say, oh, that's where he's projecting and in this time frame or whatever. These are just linked wave counts. My focus is always on the immediate, unless I tell you otherwise. Okay, so that's where we're at with the weekly view. On the daily view, I look at this and say, well, the alternate to me would be that Minute Wave 3, which I show ending here, may not have ended until the high up here. And maybe we're just in for a little more of a minor correction and then one more push up to finish minor wave 1. Okay, so that's a real possibility. So I'm talking about this. It's possible the alternate is 1, 2, 3, 4, and then 5, and then we're done. That's what this is right here. Okay, that's what I'm talking about. But right now, my focus is this count right here. And we'll look to see what kind of pullback do we get. How does it develop here over the coming, I need to get rid of that, the marker. Okay, how does it develop over the coming days, weeks? Now, another interesting thing that's going on is a lot of times you look at these charts like this, and I really do try to minimize the amount of indicators that I have. And because to me, more indicators means more confusion in reality. So you look down here and say, well, he's just got 2 indicators. Well, in reality, every moving average is an indicator. Keltner channels are an indicator. So there are multiple things going on here on the chart. And when you strip out all the noise, here's the candles. And it looks like a head and shoulders pattern is possible. Right in here, right? Shoulder, big head, possible right shoulder. Now, when does this get confirmed? If it breaks down through this neckline. And if it were to do that, I would project that it would move down into this territory right in here, which may end up being just a minor correction. We'll see. But that's the way it looks right now when you strip out the noise. So that's where I sit with the SPY. And again, we are in October, and many times mid-October has a tendency to have highs, and then it pulls back down to the end of the month into maybe the first week of November, etc. There is no, I mean, it doesn't do it every year, but it just seems like there's a tendency for that. So just keep an eye on that. Okay, so that's the SPY. Let's take a look at those bank ETFs. Okay, here's KBE, which is the bigger banks, I guess. ETF up 77 cents on Friday after the big move down, 2-day move, actually, Wednesday, Thursday. Okay, then we got a little bounce on Friday. But when you look at this, I do not use a 200-day moving average. I use a 233-day because I use Fibonacci numbers. So what you're seeing on the screen is a 21, a 55, and a 233-day moving average, but it gives you pretty doggone close to the same thing as those who are using 200-day moving average. So anyway, looks like a lot of weakness in here. It could be getting support on a daily basis. It could be getting support when you look back over here to the highs right here, and the lows that came in, I would say around 55, which is about where it stopped on Thursday. We'll see if that truly develops. I know we have some divergence down in here. Divergences, they just wave a little flag saying possible bottom, but they can also disappear in a day or two. So just keep an eye on this. This is showing quite a bit of weakness. It's come down, but when you look at the weekly view, it's down 4 weeks in a row. Now, the other thing I want to point out is, look at this dashed line. This dashed line is the 2007 peak in the price of KBE. That is the peak. You notice how we've really blasted through that, right? Not so fast. Not so fast. It really has struggled to get above there in the bank index. Okay, so let's take a look at KRE, which is the regional banks. Similar kind of picture that we're getting on the regional banks. They ticked up a little bit, up 93 cents, and on Friday on the week down $1.12. So a little more negative, but of course that's where all the focus was, right, with some of the regional banks here. It's like deja vu. We're back to March of '83, although something, we'll see what happens. But not quite in the same kind of support area as I just pointed out on KBE. When I come back over here to the highs, they're below that potential support area. So we'll see, just a lot more weakness. Same kind of picture on divergence. And then when you look over here on the weekly view, this is kind of interesting. This resistance zone that was created with the peaks over here in 22 into 23, okay, couldn't really get through it a year ago. And then it definitely couldn't get through it here in January of this year. And then we struggled again here just, at the end of August. And so now we've been down how many weeks in a row? Well, it looks like 4 weeks in a row, because this was an up week, it looks like. Okay, so 4 weeks in a row on both KBE and KBR or KRE, and we'll see what happens. But right now, there definitely looks like there's rumblings in the bank sector again, and it could be trouble. We'll see. Okay. Oh, I wanted to take a look at the semis. Let's just show what's going on there. So Harami, possible in both of these indices. or ETFs, I guess. They're not indices. I think some people treat them like indices because they're pretty much an indication of what's been going on in the market in the tech sector. But look at SMH up $17.49 and the SOX index 16.18. But man, this has got a potential in here. And yeah, you're getting a little bit of divergence here over the last couple of weeks. But the other interesting thing is, I just glanced back quickly. I didn't do it very, very slowly, just a quick glance back to see, have we gotten a look like this before in the last 5 years or so? Well, let's go back to 2020. And here we go. Now, it's not a red candle and then white, but we got white, then red, but it's the same exact price action type top that occurred right before the COVID crash that occurred. Okay, and you got it on both of these ETFs. So that's a little ominous. We'll see what happens here over the next couple of weeks. So that's where we sit with the semis. Let's take a look at Apple. Okay, so Apple was up $4.84 on Friday, and I saw in the afternoon that CNBC was blasting about the fact that supposedly their iPhone Airs, where the new iPhone Airs had sold out in China. I don't know what that means. I don't really pay attention to that, but they were putting enough of that across the wire and on the screen. And it started rallying, pushing a little bit. Right now, I'm somewhat bearish on Apple. I just think it looks like it's about ready to roll over. It was up $7.02 on the week. A little inside up type candle. Is this Harami? I think I would have rather seen the prior week be the high. So I don't know. I'm not leaning on that too much. What I'm really looking at is the Elliott Wave picture. Okay, so last week I talked about Tesla, and I said Tesla looks like it's doing a counter trend move in here. And I talked about the triangle in here in this move on Tesla. Well, we got a similar kind of thing going on Apple, and one of the folks watching the video pointed that out to me, and he's absolutely right. I'd been looking at that, and I kept trying to make sense of the fact that, is this a B wave? Is this a triangle? And I really do believe it is. And so here's what I think's going on. I think we've got an ABC. I think we have an ABC coming down from the peak back over here in December of 24. And so now it makes me think, do we just have a large flat developing in Apple? I know this is a daily chart, but right now my focus is, does this roll over? Does it take out the high? So what is the high? The high is 259.24. We'll see. Right now, I think it looks negative to me, but the stop would have to be above 259.24, and we'll see if we get any follow through to the downside. Because if it does, this could get a lot more negative than what I'm really looking for in the overall market indices. I already told you what I'm looking for in the SPY. Could be either a shallow correction or maybe a 38 to 50% type correction. This implies a lot more. My first target, if this is doing like a flat, my target would be something down at right here near the end of the first wave A. I know I've got this going a lot lower, but the first target would be where A ended, which is all the way down here around 170. Well, that's quite a bit of a pullback. So one wave, 1 week at a time. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Everyone have a great week. We'll talk to you on the next video.